Welcome to the Farming Without the Bank podcast, the show with a no BS approach to money, hosted by a farm strategy expert and authorized IBC practitioner. Join us as we get real and expose the flaws of traditional financial institutions in order to help farmers take control of their finances, create peace of mind, grow their wealth, and leave a legacy. Now, here's your host, Mary Jo Irmen.
Hello once again, and welcome to the podcast. All right. I'm sure this isn't your first podcast. Nobody just jumps in on whatever number we are today and says, oh, hey, I'm going to start listening from here. But if you did, thanks for joining. And again, to all of you followers, thank you for coming back. I appreciate it. We are once again today going back to Nelson's book, Becoming Your Own Banker, and we are on the chapter, How to Start Building Your Own Banking System. In my book, this is page 41, and I just learned, as we were studying this chapter, I just learned there is an addendum in this chapter. My book is so old that it was not, I guess, you know, you've been practicing the concept a while when your book is so old that you don't have every bit of it. So now I might have to break out one of the latest printings and see what I've been missing this whole time. Because I have the third printing that I use and have used for years and years and years. Okay. So you most likely, if you are just getting the book, you are going to have the latest printing. Anyway, page 41, How to Start Building Your Banking System. And in this chapter, Nelson really talks about the 5 methods that we can use to buy a car. But we can apply those methods to anything. It's not just a car. You know, the very beginning of the book, he says this is a practice in imagination, reason, logic, and prophecy. And so please use your imagination, reason, and logic. When you are really reading his book, you really have to think big. And it's not just one thing he's talking about. So ultimately, it doesn't matter what he's talking about, office equipment, farm equipment, cars, whatever, it all applies. And so the first thing that he says is by the time people get to this portion of Nelson's book, or even when you guys are getting within my book a few pages in or a few chapters in, you're like, oh my gosh, this is awesome. I'm going to finance my entire house through this system, or I'm going to finance all my farmland, or I want all $1 million of operating to go through this system. And he says it very nicely in here. Don't do the house. Don't do that big purchase. It is overwhelming and would involve such a radical change in lifestyle that it becomes practically impossible. And I find that a lot, that people get so overwhelmed by the number of what they need in that policy that they just don't even know where to begin. And so it's a process. And I don't know how many times I've said this, and I probably sound like a robot, but this is a process of getting that cash value built to where you need it so that you can use all of it for operating. You can use all of it for buying land. Whatever it is you're planning to do, it takes some time. And if you want, the faster you want to build it, the more you have to beat Parkinson's law. If you don't know what Parkinson's law is, go back and listen to that podcast on Parkinson's law. But you have got to beat Parkinson's law. And as I'm recording this, I just got off the phone a meeting with a new client, and he wants as much in there as possible. But now we have to say, okay, you want that, but now that's a high premium. If this is how much you want in 5-10 years from now, that's a really high premium. You're going to have to adjust your lifestyle. And if you don't want to adjust your lifestyle, you're going to have to be patient. You cannot have your cake and eat it too. So as he goes on in this chapter, though, he really talks about all the ways there is to finance something and to purchase a car. And the first thing he talks about is leasing. And people are always saying, well, I'm going to lease that piece of equipment or I'm going to lease that car because it's cash flow. It's a really small payment out every year. And so it works really well. Somebody else has to be responsible for taking care of it. Okay. Nobody can really figure out what the true cost of that is because what's the buyout? Everyone is a little bit different. We can go through the numbers over and over and over. So if it works for your cash flow, great. But when Nelson gets into the second method of buying a vehicle, and that's going to the bank and borrowing money, he makes a very valid point. Reason tells you, remember, we have to use reason. Reason tells you that the first method, leasing, must be more costly than this one. Otherwise, no one would ever purchase. They would all lease. One must lease from an owner who has to buy the car. Is the owner a fool? Is he not going to make some money on this activity? If you're leasing, somebody has to buy it. If you're leasing a tractor, the dealership or whoever the manufacturer is built it, has the cost of that in it. If they're not making money, why would they lease? I mean, think about it. And is the owner of that piece of equipment the dumb guy? Because why wouldn't he just sell it? So obviously there's money in leasing, but if you can't lease, your only other option is to go to the bank and borrow the money from the bank and buy it yourself, right? Then you have interest that goes to the bank. The third option is to use cash. And what? We're going to save up so that we can borrow or we can take the money from savings and pay cash. And it's so fitting that the person that I had my meeting with right before I'm recording this makes a nice off-the-farm income. And I'm like, where is all your money going? You don't have as much in savings as you should for somebody that has your expenses versus income. Well, I didn't ask the right question. What have you just bought with cash? Like $40,000 worth of stuff. Savings was really high because they're a really good saver. But in order to buy something, we have to capitalize that account, don't we? We have to put the money there and we have to save for X amount of years, and then we can use that money to go buy something. But once we buy it, we have to immediately start accumulating money again for the next purchase. So what do? We make payments back to savings, but what is that payment really? A deposit into the savings account. Because a saver, somebody who is always buying with cash, is a saver. They don't just use the money from the account and then never replenish it. They're going to automatically replenish it so they can purchase their next item with cash. And Nelson said, it's all a matter of where the payments are being made. The leasing company, the commercial bank, or the savings account, right? Somebody is going to get a payment. And again, don't get caught up in the terminology, but that payment can either benefit you or that payment can benefit somebody else. And he says, be aware, we have covered 90% of the population. Holy moly, think about it. That really is 90% of the population. The fourth method he goes over is a CD. Now, those of you that are old enough to understand when CDs were actually used, Nelson talks about the fact that we can capitalize a CD and we can put money into this CD and accumulate there. Now, we're not going to have liquidity to use it, right? Well, if it's a 10-year CD or a 5-year CD or a 2-year CD, we don't have access to it then, so we're going to have to borrow against the bank. But he's now moved on to compare a little bit about how long it takes to get things going. We had to capitalize the savings account, right? If we're going to put money into savings, we're going to need to save 4 or 5 years in order to buy that car. If we want to replace that car every 4 years, we're going to have to save so that every 4 years we are able to replace that car. In a CD, if we want to use the money from the CD to purchase something, we're going to have to put money into the CD every single year or upfront and wait for it to earn its compound interest so that we can use it. And he says, if I can show you somebody that can capitalize, they have beat Parkinson's law, and he will win by default in comparison with his peers. We have heard that over and over and over in Nelson's book. If you can beat Parkinson's law, you are winning by default if you are comparing yourself to your peers. Why? Because they can't beat Parkinson's law. They have to have all these new toys. They have to have instant gratification. But if we can beat that, now we have a place and we have some money. If we put money in a CD, there's really 4 characters in the play here. One is a stockholder who's the owner of the bank. He's the one earning the dividend. Then there's a CD holder, which is the person that owns the CD and earns the interest. Then there is the administrator of the bank, and they have the salaries, right? We have to pay them. And then the borrower of money, an absolute necessity in the whole scene, is what Nelson is saying. And what he means there is when I put money into a CD at the bank, somebody must borrow from the bank in order for them to be able to pay me the interest I'm earning on my CD, right? All they do is I put money in the bank, they might pay me 1.5% on it, and guess what? They go lend it to somebody else at 3 or 4%, and who then makes the difference? The stockholder who's making the dividends. The person that owns part of the bank is making anything above and beyond what they're paying me. Okay? The borrower needs to be there, or I can't put money in a CD because they can't pay me interest. And then there's no administration to manage it. The borrower is the absolute necessity in the whole scene. And then he goes on to talk about the 5th method. So we have the first 4 again, just to recap, because I've gotten a little long-winded. The first 4, we lease, we either buy from the bank, we save up and pay cash, or we save up in a CD. The 5th is the infinite banking concept. We capitalize a whole life, dividend-paying whole life insurance policy. Okay? After 7 years of capitalization, the owner withdraws the dividends in the amount required to pay the cash for the car. Now, this is a different method, right? We would normally say borrow against that money. But there's many ways to do it. Not that Nelson recommended this, because this is not what he would recommend. He's just illustrating what you can do. The process does not involve policy loans. In order to play honest banker with himself, he must make premium payments to the policy instead of the finance company. So you're either going to pay the finance company, you're going to put money into savings, or you can borrow from the policy and make the payments to the policy. You can make those premium payments to the policy to build the cash value to then borrow against, right? It doesn't matter where it's going. A payment is going somewhere. There are only really 3 of these that involve capitalization: a CD, a savings account, and a life insurance policy. All of them are capitalization. Those of you who are listening and are savers, you are capitalizing that savings account. It's no different. If we're capitalizing a life insurance policy, we still have liquidity to use that money. This is where people get hung up, is that, well, when I put money into savings, if I put $100 there, I have access to $100. That doesn't happen inside of a life insurance policy. And Nelson says, every time a person buys a life insurance policy, he is starting a business from scratch. There is an inevitably delay in results in getting the business started. The life insurance company is nothing more than an administrator of the plan the policy owner purchased. If you've seen an executive vice president of a life insurance company and an executive vice president of a bank, they could change jobs every 6 months and no one would know the difference. They pretty much do the same thing, right? It is the stockholder or the bank owner that makes all the difference. This is the party that puts up all the capital to start the business and earns a reward or suffers the loss. So if you buy a life insurance policy, you now become part owner of that company, right? So if the owner of the bank is getting the reward, would you like to put up and start your business of banking inside of a life insurance company so that eventually you get to reap the rewards? Because there is a startup cost. So many people cannot get over that. What you're going to give up front, you're going to get later. This is not an instantaneous reward system, right? We don't get instant gratification. We are going to have to wait for it, very much like starting a farm operation. When you took over or when you started, it wasn't all roses. It was hard. We had equipment to buy. We had expenditures that we needed to get started. Did you expect to be making bazillions right away? No. In the life insurance method, the policy owner is earning both interest and dividends. Okay? So in the CD situation, if I own a CD, I'm only earning interest. The bank owner is earning the dividend. In a life insurance situation, I'm now part owner because it's mutual. I am getting the interest and the dividends. This is huge. Huge, huge, huge. Do you want that dividend? When you look at the policy, the first couple years, the dividends are minimal, maybe nothing. But every single year, that dividend is bigger and bigger and bigger and bigger. And he says, hardly anyone takes this into consideration. They all tend to look at the early years of the two methods and conclude life insurance is a poor place to accumulate wealth. They couldn't be more wrong. So now he's talking about two methods, a CD and a life insurance policy, right? Well, that's what most people say. That's not a surprise. Oh, this is terrible. Mary Jo's just trying to sell life insurance. I'm actually trying to teach you something. That's what I always tell people. I'm just trying to teach you something. But if you don't want to learn, that's good. Save me the time. And in his book, he compares this. Now, you guys need to get this because you're obviously not going to see this. But on page 45 of his book, he compares a CD earning the same 4% to a life insurance policy. The CD is going to outperform the life insurance policy. However, eventually, the policy is going to outperform the CD. And he also shows what happens when we withdraw money from the CD versus the life insurance policy. The CD is out of money in 5.5 years. The life insurance policy is still going strong. And we are, 8 years later, and we're still going strong. And we have death benefit. Why? Because of the dividend. That is the only difference. This whole chapter and this whole illustration is telling us that we should be the owners. We want the dividend. And he sums this up very nicely here. And he says, who are the characters in the play? Shakespeare said, all the world is a stage and all the people are actors thereon. Now, I don't like Shakespeare. I didn't ever like that book. And if videos would have existed back in my day, I wouldn't have ever read the darn thing. But, I guess there's something in there that was worthwhile. All the world is a stage and all the people are actors. When it comes to the subject of finance, frankly, most folks don't understand the play. Worse than that, they can't get the characters in the play straight. Who do you want to be? Do you want to be the bank? Because they must lend money to make interest. Okay? Do you want to be the bank where you're lending money Do you want to be the bank owner where you're collecting the income, right? You're making the profit, you're getting the dividend. Do you want to be the borrower where you have access to it and the full control? And guess what? You own a company that has people in the background being the administrators. Who do you want to be? Well, guess what? I want to be them all. I want to be the owner. I want to be the banker. I want to have the administrators. I want to be earning the interest. I want to be earning the dividend. I want it all. And yes, we can have it all. He says, a bank must lend money or it is not in business. So does a life insurance company. The stockholder and the bank earns dividends. So does the life policy owner. The CD holder at a bank earns interest. So does the life policy owner. The life policy owner gets both interest and dividends. As a CD holder, you're not getting that. And I know I've said it and I'm still saying it, but it is so important. And it's important because we're not seeing it up front when we start these policies. This is why all the talking heads and all these uneducated, know-it-all life insurance people out there, and I when I say people, I don't mean life insurance agents, uneducated people walking around on the streets, mimicking what they've heard that, oh, whole life is bad and it's expensive. There are upfront costs. Because it's life insurance. We have administration fees. It's going to take that life insurance company, and he says it here in his book, 13 years to accumulate the income that they need from your premium to pay your death benefit. 13 years. They're starting a business as well. Every single time you start a policy, it's like starting another little business. So does there have to be costs there? Yes, there has to be costs. But once we get past that point, man, things look absolutely fantastic. Because guess what? The business is going. Everything's going good. And think about it. And Nelson says it here. In order to issue a CD, a banker has to create a bank. From the start of the idea until its break-even point, it will take an average bank about 15 years. So you get to go to the bank and you get to buy a CD and you think it's all awesome. Well, they're taking the profit because it's taken them 15 years to get to break even. It takes the insurance company 13 years to break even. I've heard some people say 10. It just really depends where their investments are, right? But those of you that are hung up on the fact that I don't get my money right away, you are not thinking big enough. You are not understanding the full amount of this concept. And so when we go into the addendum, he is talking about using dividends to purchase the car. And he said, I would never suggest that a client do it this way. I would recommend policy loans. So just as I said when I started this out, we would use a policy loan. He is just illustrating how else you can do it without paying it back, because people have a problem with the word payment. There is no problem with the word payment when you classify that word correctly and you understand the terminology and what's happening with that payment. Okay? So if you're looking at the book, look at page 45, and then he's got illustrations on 46 and 47. But the moral of the story is there are other ways to finance things, and we are all doing it incorrectly because this is one piece of the puzzle. It's like the very last piece of the puzzle. We just can't finish it till we find that last piece. This is it. This is the last piece that allows us to be all the characters in the play. Earn the dividend, have the control, have the liquidity. So you really have to just ask yourself, do you want to be the character? What character do you want to be? If you want to deal with the bank and you want to let them make money off of you, by all means, go right ahead. But are you truly that concerned about a tiny little life insurance policy that's holding you back from getting started? Do you want to put more in? You're going to have to beat Parkinson's law. The bigger you want that thing, you're going to have to make sacrifices elsewhere in order to fund it. And remember, when you're funding this thing, you have to pay loans back and you have to pay the premium. You guys, you know what's amazing to me is I have a ton of agents that work with other mutual companies, and these two companies in particular do not allow their agents to be infinite banking certified. In fact, one of the companies will fire their agents if they even see Nelson's book on the desk. And these agents are buying my books like crazy, okay? They are not understanding this concept. They are selling life insurance, but they're not understanding this concept. This is huge. When we're working with clients, this is absolutely huge to understand this. And so I'm asking you, if you are working with an agent that is not certified, how important is your money to you? And I had somebody tell me, well, I feel bad. This other agent gave me the book. Does the other agent feel bad that he's not certified, that he doesn't understand the concept, that his company cannot even do what we do? They don't have the correct structure to the policies? Do they feel bad that they're taking your money and utilizing it incorrectly, not being able to give you the advice that you need? But you feel bad because you aren't doing business with them and they gave you the book? Really? I said, if your agent wants to do it right, he should get certified. Well, where does he do that? Well, I gave him the information, but seriously, if you're an agent and you've not read Nelson's book and you've not Googled it, you don't deserve to be selling my books and sharing them, because you have truly not dived into the concept. You've truly not educated yourself, and you're just selling life insurance. You consumers and people listening to this, if you truly want something that's correct, why are you using somebody that doesn't have the knowledge? Are you going to the garden department at Ace Hardware to figure out what to put on your field? Or are you going to a local agronomist and a local seed dealer who understands what your crops are going to need? Seriously, do you go to the pet store to decide what you're going to feed your cows and your goats and your sheep? Or do you go to the local feed store where they understand the nutrition? Come on, people, think about it. This is your money. It's no different than your land and your cattle and your equipment. You go to the experts for those things, but you're going to let somebody, the biggest thing that you guys do, the biggest thing running through your operation is money. And you let somebody that is uneducated try to sell you a life insurance policy to teach you a concept they know nothing about. Well, there won't be any teaching, let's be honest, because they don't know how to teach it. They don't know anything about it. But they saw the books and they thought, well, this is going to make me some quick commission, right? I can help somebody. If they truly want to help, would they not go get certified? Would they not try to figure it out? I know that these companies will not allow these agents to be certified because I have a client who has an agent with this company and they will not allow it. She asked. They will not allow it. What kind of company does not allow their agents to be infinite banking certified? A company that doesn't want you to be taking loans in the first place. Pay attention to your dollars. Pay attention to where your money is going, who is helping you. Make sure they understand farming. Make sure that they understand the infinite banking concept. Make sure that they understand the strategies. Because I can tell you right now, they sure as heck do not understand how to structure a policy, because I've seen them over and over and over and over and over, and they're wrong. Wrong, and they do not have the ability to put the money to PUAs. They just don't have it. The company doesn't allow it. They don't have the flexibility and premium. Those things are super important. Okay, these book study podcasts are important if you are a client, if you are looking to be a client, if you have read my book, and you've not read Nelson's, you can get Nelson's book off of my website, farmingwithoutthebank.com. You can get my books on farmingwithoutthebank.com. But if you want Nelson's book in audio, you can go to infinitebanking.org and you can get his book in audio. There is absolutely zero excuses to not be listening to his book. There is so much good content there. And just like when people say, Mary Jo, I've listened to your book 3-4 times, I can tell. If you listen to my book and you listen to Nelson's book over and over, you're going to become the expert. You're going to understand what he's saying. Go grab his book. All right, y'all, if you have anything else that you need, let me know. MaryJo@withoutthebank.com. Tune in Thursday evenings at 8:30 Central Standard Time, and I am doing a live every single Thursday on Facebook to go over weekly meetings. If you need anything, just holler. I'm here, happy to help. Until next time, have a good one.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.